Yo, what's good? What's good? And we are back. We are back. What's popping? So, uh, I've got some stuff for you guys today. I think with the last week being pretty chill for the most part for markets across the board, things have kind of been even keeled. But I think we might start to see a little bit of volatility because, yeah, I mean, as we enter into a new month, we may have some new surprises. So, today, we're going to do a little bit of a journey. We're going to do a little bit of a deep dive, kind of look at some different aspects. But really, the main points of today is kind of understanding this FOMC meeting schedule. And I mean, you've got to have your eyes closed if you think that this isn't a big deal, right? And so, every time that we have a meeting, there's a lot of volatility around these particular dates. And so, when we kind of learn the anatomy of how that is structured and what we're seeing, we could see a very interesting trend here that I'm going to kind of show you guys today. And so, you can see it as an opportunity, or you can see it as just things that are not really important. But what I'll say is, those who pay attention just have a different insight. So obviously, this is not financial advice, you guys. As we go on this journey, I hope this is just informational. You can guys utilize the things I'm going to show you today, and then and just really try to take your strategy, whatever you may have, your knowledge to the next level. And so, with that being said, let's get into it really quickly. What's up, you guys? So I see Wade in the chat. KK, what's going on? How are you? Black Label Expat, nice to see you as well. And so, yeah, I mean, let's get into it. I'm really looking forward to kind of bringing some things to light as we kind of trudge on over towards the end of June and going over into July. But there's some interesting things that I did see. Let me share my screen really quickly and let's talk about that really quick. So let's do this. So this is interesting. So Bitcoin Twitter account, which mind you, they don't have much stuff on here that's any good, but today they did. And so I thought this one was actually pretty interesting because it really does explain a lot of kind of what's going on, you know? And so it says, we'll sell bonds to you so we can bail you out with loans. So that's the government, right? And then the banks, hey, we'll borrow money from you so we can buy your bonds. And so what's going on? They're basically sending each other into a death spiral. That's exactly what's going on. These bonds, right, that need to get sold off by the United States government, right? They're junk bonds, guys. And so what we're seeing is through time, Russia, China, people are starting to get hip to understanding that they may not need the dollar as much as we want them to. So they're learning to do trade outside of U.S. bonds and U.S. dollar. Now, mind you, the DXY, so the dollar price, has been going up. But with that being said, we're just going to continue to look at the macro scene. But I just thought this was funny because these two are in cahoots. So the government, the banks, they're like blood brothers. And so they do whatever it takes to make sure each other is happy. And so what we're seeing is a degradation between banks, central banks across the world now. And so, this is going to be interesting to watch, especially through the rest of this year. And so I did want to just kind of look at that. I got something else here. So there's a group called Anonymous out there. And I don't want to get any copyright infringement. So I'll just play literally like the first, 5 seconds and maybe kind of cut to somewhere in the middle. But these guys, they have a track record of pointing things out and actually being pretty accurate as far as what's going on underneath the hood. And so, Do Kwon, they are coming for you. Let's skip through this really quickly. Kind of interesting the way they go about it.
Greetings, citizens of the world. This is a message from Anonymous for Duquan. The past several months have been bad for crypto and the economy as a whole. We were likely going to experience some pain in the crypto industry because of the macro environment, regardless of what was happening.
All right. Don't want to play too
Duquan
much
denied
here.
these accusations in a roundabout way, but not exactly. In a recent Twitter post, Duquan denied cashing out $2.7 billion, but that doesn't account for the $80 million each month that he was apparently taking. He claims.
Okay, that's it. Y'all can go and watch the rest of that if you want, but they got the red dot on Do Kwon right now. So apparently from an SEC investigation with people who are working with Luna Foundation. Do Kwon was taking $80 million a month, stashing away. And the thing is, he never denied that. So that's pretty interesting. Anyways, outside of that, let's go ahead and take a look at the markets, right? So we'll start with crypto, of course, but then we'll branch off and look at some other sectors here in a second. So as of right now, we fell below that 1 trillion market cap for the total crypto market. So we are looking at about 951 billion with a B. That's decent, right? We were at 3 trillion. So I've been looking at like a lot of news headlines talking about how we failed 2 trillion, in market cap. But with that being said, look at other asset classes that have basically failed a lot more than that. So that is 2/3, right? And so we know that this is probably the asset class that, especially like investors who are institutional grade, they're probably going to offload crypto first, but nonetheless, they will start to buy crypto in droves when markets get back to where we'd like to see them. And so we've got to kill some inflation. We've got some other things that we need to do across the entire globe for that to happen, especially here in the States. But as we kind of continue on, so I'm on Nomics today. So, I don't know if you guys take a look at Nomics, but it's just another view, right? There's obviously CoinGecko and CoinMarketCap, but Nomics does have some interesting information as well. So Bitcoin under 21K, kind of chopping back down to 20K. And so we'll look at Bitcoin here in a sec. But nonetheless, we're still below the realized price, guys. So the realized price for Bitcoin is sitting around like 23K. And so in my book, if you just look at these metrics and understand, anytime you get below a realized price, historically, not financial advice, but historically, that has been a decent time to DCA. So whatever your strategy is, take heed to kind of what we're seeing through time. Not saying that what happened in the past is going to predict future performance, but there is some type of credence, especially once we've seen this metric play out over a span of 10 plus years. And so let's take a look. Do we have anything that shuffled around the top 10? So yeah, so Dogecoin over the weekend, they pushed out Polkadot, and so Dogecoin is now in the top 10. You know, hey, look, there's network effect here. That's what I'll say. I think what I'll do actually in my next stream, I think I'm gonna do a deep dive of really explaining what a network effect is, because we've seen it with Amazon, Uber, other things out in the natural outside of crypto. And so Bitcoin and Ethereum, they've got it. They've got that network effect. And so what we're starting to see through time is the coins that continue to make it. Even though this chart, right, this chart for Dogecoin, it looks like straight crap. If you are a swing trader, or you know how to look at lows and understand when the demand starts to come back, Dogecoin is something that people have made money on, right? Not saying that this is a long-term bet for an overall portfolio, but nonetheless, it's in the top 10. And then so, Polkadot is number 11 now. And so, as we can see, it's a red day. Good old Hex. So here's the thing. Hex dropped down number 18. Remember when Hex was in the top 5, right when, things were happening in September and it was having this, high demand cycle, right? But as of right now, down 14% and kind of trudging down from, 5 cents. And so we will see. We will see if we can get that 1 cent Hex. Being the fact that it's on a log base 2 scale, and kind of just looking at some of the liquidity on Uniswap, especially that V2 liquidity, I don't know if we'll get that 1 cent Hex, but we can talk about that at some point. And so outside of that, nothing too crazy, nothing like 30 or 40% down. So there's no capitulation today, and then nothing really appearing out gaining more than, oh well, we got 1 inch today. So we all know 1 inch aggregator to spread those buy orders or sell orders out. So they are doing okay today. They're in top 50, so they got 14% gain today. Let's see here. Anything else in the top 100? Not really. So it's a pretty mundane day today. And if you are a trader and if you like high risk, going for Terra Classic is something that you could look at, but high risk, and what else? High risk. So it is up 108% today, but nonetheless, that could be down 80% tomorrow, guys. And so if you want to feed your gambling needs, which is not investing, it's more speculation, but you got Terra Classic. And so the fact that that's still in the top 100 is pretty interesting. So keeping my eye here, keeping my eye here. Let's see, keeping my eye here. What else we got here? I'm not being very specific, but if you guys can use your eyes, you can see what I'm talking about. Actually starting to keep my eye here. What else we got going on? Obviously keep my eyes here. Keep my eyes here, here. And this is my main focus. My main focus is accumulation right here, accumulate, accumulate, accumulate as time goes on. And then so that's that. All right. Anyways, let's kind of move on. We're going to shift gears just slightly. We're going to look at traditional markets. Ooh, fun. Because outside of crypto, we have to understand that this market cap is very, very small compared to all the other money out there. So we need to understand what's going on so we can see what's the trajectory here. Okay, cool. Let's do it. So let's pop over. So what we got here is we're looking at just the last day. So we're looking at all these different sectors all at once. I love the way that we can do that. Technology, data, we got to take it for what it is and take it as an advantage against those who aren't paying attention. And so as we can see, there's different sectors that we're looking at. We're looking at healthcare, technology, energy, S&P 500, right? So we see that in blue. We got the NASDAQ, which is the closest representation to Bitcoin and crypto. This is the best sector of growth through time. And that's why crypto has such a correlation, because this is basically the top 100 tech companies in the stock market. So paying attention to the NASDAQ is going to be very important for us to see, okay, well, how is crypto doing for the day? And as we can see, it's down 2.3%. So obviously Bitcoin is going to follow on track with that. Got the Dow Jones, real estate, crude oil, utilities, Russell 2000, and materials. So the biggest thing is look at what is trending together. So all of these basic sectors are trending together. What's not trending together? The commodities, okay? So what's not trending together? So we got XLE, which is energy, and then we also have crude oil. So the interesting thing is that crude oil, once the day opened, was tracking along here, but it started to deviate in the last few hours, right? And so it is in the green for the day. And then as we can see, energy still across the world is still very high. And there's reasons for that, which we'll talk about. And so energy, the deviation is just this market here. If you know how to invest in energy, which at some point, maybe in another stream, we can talk about that. I know we're crypto focused, but just paying attention to where is the opportunity? Energy has been doing well. I mean, if we just want to look year to date, what can we see? Clear that these commodities. So basically, if you're paying for either of these as a consumer, guess what? You're going to be paying more. And that's exactly what we've seen across the entire globe. Asset prices for all this stuff down. And then so the interesting thing is, if you're a long-term investor, so this is year to date, if you're a long-term investor, just look at Bitcoin and just see how it has so I'm going to look at Bitcoin. So let's highlight it. And it's doing the worst out of every sector year to date. But that's why we talk about cryptocurrency investors. The question is, are you year to date investors, year long investors? Are you in this thing for the long haul? Because look what happens when we start to add, okay, 1 year. Okay, we see Bitcoin had an opportunity to have outsized returns from a year ago, right? 3 years. Oh, look, Bitcoin is starting to dwarf everything else. And at its best, from 3 years ago, you could have had a nice 487% gain. So if you know how to look at a chart, you probably know how to take some profits. And so that's what I'm all about here is educating on how to really compare these markets and see how to maneuver through it. Not financial advice. All right. And so, this is something that we see. But 5 years, let's take a look at that. And as we see, Bitcoin continuing to dwarf these other markets. And obviously 10 years, you're not even going to see these other markets. It's just Bitcoin. So that just goes to show you, where is your money best spent through time? Investing obviously is the root. People who don't invest, unfortunately, have to struggle longer because they are working for their dollars. They don't use their dollars and have their dollars work for them. So if you understand this concept, you can do yourself a favor through time. Maybe not this 6 months or this next year, but as you stack the years, keep working and accumulating, getting assets is the best way to help yourself financially. It's just facts. You cannot dispute it. All right. But outside of that, as we can see, energy and oil still pretty high. And so there's an interesting article about that because the next question is, well, here in the United States, I know there's people everywhere. And so if you're watching from another country, great to have you. I reside here in the States. And so we have an interesting article, and we're talking about Exxon. So Exxon is one of the largest oil, you know, I guess you can say providers here, especially in the States. But just from an energy standpoint, because it's all kind of in one conglomerate, right? Read here, it says Exxon CEO warns that consumers will pay for hasty energy transition. And so, as we know, with the way that our president is currently doing things, being carbon neutral is something that was definitely a part of his campaign trail, Mr. Biden. And so, the whole aspect of all the vehicles being electric vehicles by 2050 and stuff like that, or even 2040, I think some estimates say, having a low carbon future is something that they're really, really trying to push. So they just neglected all of what's happening currently, though. And so most vehicles are still ran off of gasoline. And so them shutting down manufacturers here in the States, them not building more to be able to, because we have so many places where they have untapped oil on this land. But yet consumers have to deal with that issue because of the lack of addressing what's actually going on for a future that is not definite. And so that's the thing why you may ask these questions. It's a matter of supply. We just don't have enough supply here for the demand. And so supply is a big part of that. And then so let's read here. So if we read here in bold, Exxon joins many other oil producers who say that governments and policymakers need to balance the drive to lower carbon emissions with the people's current need for affordable energy. That's key, the current need. If you cannot address what's happening today, you can't fast forward 20, 30 years and say, hey, this is how it's going to be. No, you got to learn how to do both. If you want to do something in the future, you got to be able to say, hey, what's the best route for here and now? And we're going to start stacking these Legos for the future. But if you just completely ignore the here and now, what do you think is going to happen, right? It's just like you're a parent, your baby's crying. Oh, in about 3 hours, they'll be okay. No, your baby's crying now. What are you going to do? Same thing. So, all this stuff, what we've seen is just in general, a lot of lies, guys. We like to do a lot of finger pointing, especially here within leadership and just across governments across the world. A lot of, hey, no, it's their fault. No, it's their fault. No. Let's talk about how we printed $8 trillion in the last couple of years. Let's talk about our lack of taking action in the now. It's really that simple, guys. It's not really that complicated. And what do? They use social things. So, I mean, I'm not going to touch on this too much, but they use social issues to try to distract us. Roe v. Wade, just to name one. So we don't need to get into all that, but that's something, right? Okay. So now let's kind of dive into the main topic. And so the main topic is how can we use the FOMC meeting schedule to kind of help us out and give us a little bit more information. And so as we what I always like doing, guys, is just look at big scale, big picture, right? This is the stock market, SP 500, through time. So we can take it back to the 70s. It is programmed and it is manipulated to do nothing but go up through time. I mean, you can go back as far as you want, up through time. The reason why this happens, simple, is because our dollars are continuing to be worth less, and less. No fiat system is meant to last forever. So the dollars are going to keep going down. The British pounds are going to keep going down. The thing is, what they try to do to combat that is have external trade, have other countries that need that dollar or whatever the case is. So that's why the US has been able to last this long, because it is the reserve currency of the world. But nonetheless, learning to trade those dollars for assets is how you keep up and beat inflation. And then in times where inflation gets extremely high, learning how to take profits on your assets, ride the wave until you can re-enter, is something that people just have to learn how to do. It's like an ebb and flow. Got to learn how to box, stick and move, right? And so, but at the time, long term, just being in assets typically has been a good idea. So just something to think about. Something to think about. But nonetheless, so this is the weekly chart. As we can see, similar to Bitcoin, but less, volatility, but also, as we know, less returns, right? Because just for example, you had to be invested from the bottom of the 0809 crash to today's price, you know, to even get a 450% gain. And in crypto, those kind of things happen through a span of a couple years, not a decade. And so that's why we look at the asset class. But in general, let's kind of focus on this S&P really quickly. We'll go ahead and look at the daily chart. And we're going to look at these dates in particular and see what kind of story they can tell us through time. Really quick, let's go and do some traditional technical analysis. So really quickly, let's pop back over to the weekly chart. So as you guys can see, this moving average here, this 250-day moving average, so a little bit broader, or 250-week moving average, a little bit broader than the 200. But as you can see, we've touched it before, right? So especially in this, decade-long bull run with COVID, we've sliced it and we've gotten beneath it. So I would say, that would be something that is a thing that is possible with anything in any market. No one can predict anything. There are a lot of possibilities. So we want to look at probabilities here. And so seeing this happen in recent time, you got to look and see, well, how drastic, how much of an issue across the world was this? So everywhere around the world was affected. What's going on with energy and oil? Is it just here in the United States, or is it just in Canada? Is it just in Mexico, or is it something around the world? Pay attention, understand, right? Something to think about. And so as you can see, I mean, this has been almost drastic, just not as quick. But nonetheless, look at the angle, it's still pretty severe. And so as we can see, this 21, so here in this neon green, we have basically penetrated and fell below this 21 week EMA. And we've held it as resistance here. And then we've also held this 8-week EMA as resistance this whole time. So on the short term, we want to look at this 8-week. And what we see is we bounced off of it here, and then we got rejected one more time again here, right? And so I'd venture to say that we'll kind of look in probably, and we're looking at the probability of rolling over. Okay, so we had a nice candle here, got rejected, had a nice green week here, got rejected. Look at trend and understand. So once we pop into this daily chart, and we can see that even on a broader scale. So from this downtrend, we've come down, and then here, this level here. So if we were to draw a trend line, what happened there? We got knocked down. Here, let's make that solid. So we broke through it, we got knocked down again, and then we're getting knocked down again off this 21-day EMA. And then so the question is, can this 8-day EMA hold? So what we're looking for, just average regular TA, what we're looking for is if this can hold throughout the next couple of days. If it does not hold, so here at, let's do a price call, boom. So they're at 37.88. So put that number on in your memory bank. And if we dip below that, chances of us heading towards this low is pretty probable, right? And so with that being said, Bitcoin will follow suit as well. And so let's kind of look at a few things. We'll look at RSI, and we'll look at the MACD, and then we'll go into the meeting schedule. So we'll look at the RSI, and then let's look at the MACD here. Okay, And then so as you can see, same thing here, looking at the RSI, the strength on the daily, looking at a nice tight range here. And then so this is here within this bottom half of this RSI metric, nice and tight. So what do we see? We kind of played on top of it, but then we broke back through. We just got straight rejected off of this 50 midpoint here with the RSI. And then so, if we're looking at the daily, I personally like looking at the weekly RSI and MACD first. So same thing, we see this playing out, and I would venture to say that, yeah, we're gonna keep rocking down to this 30 here on the RSI, because as you can see, we're headed back down there now. And then same thing here, looking at the MACD. Let's kind of line that up, blow it up. MACD, it is just continuing to stay pretty bearish, and it's very sporadic. So the moment that you think that, okay, this thing's gonna flip green and we're back up, more stuff happens, right, across the world, and liquidity gets pulled, right, because of what's happening with these interest rates going up and them kind of running off their balance sheet. And them, by them I mean the Fed. And so, as we can see, there's still a lot of volume here, just a lot of, just people still in that fearful mind state. And so we have not hit max pain. It doesn't feel like that, hey, we're not coming back yet. Like the aspect of, if you're around in 2017 and then in 2018, if you're watching or paying attention, people who were invested in 2017, like, yeah, Bitcoin, by the end of 2018, there's like, I don't know if this thing is coming back. Still, I still feel like people are in this market and like, hey, we're going to get that pump any day. So that's how I know we have not reached max fear and max, pain yet. Because there's still so many people out here that are just like, hey, we're going to come back now. We're going to come back. Like markets have a way of breaking everyone of their confidence, even the strongest minded. And so if you feel like you're in that cohort, when you feel like, man, I don't know, when you start second guessing, then that's how you know maybe we might start to get to a bottom, right? And so that's just my opinion. Some may say the bottom may be in, but we'll see. And so, nonetheless, getting value at certain price points is always a good idea. So, like I said, for Bitcoin, 20K and below, that's still value. And so, trying to snipe a bottom is unrealistic. And so, take that for what you want. But nonetheless, just we don't have any divergence. This is showing us what's going on here, and pretty bearish still. So we have not broken a trend line even in price on this weekly. And then so kind of really I would use this peak here as a little bit more of a realistic indicator. So we would have to break this trend line here to legitimately say, hey, there may be somewhat of a rebound or a rally. And so this is on the weekly. So, until then, things are looking pretty bearish. Okay, so let's go back to the daily. And I'm going to pop up some things here. So we did that traditional analysis. One last thing. Let's do a fib retracement really quickly. So we can take that off. We'll do a fib retracement and just get an idea of about how bearish and how far we've come down. So we'll do that, take that from the COVID low. And what do we have? Let's do this, and we'll do this. Fib levels, base. Okay, we're good. And so we've been playing around with this 0.382. And so to date, this stock market is down right around 20%. At its worst, it went down about 24%. And then so the next logical place to come down to is here at this next fib level, which actually, lines up pretty well with these peaks here. And so if we were to even pop on the volume profile, what do we see? Same thing. We have a nice ledge here. So what we'll do is add a support line. And so we'll do that there. And what we've seen is like there's a lot of support here at that next level, which is just a little bit further down from the fib level. So, that's where I would venture to say where we could see things kind of pop down in the months to come if the Fed does not pivot, and other macro issues are still going on, right? And so everything has a caveat. That's why you have to have your eyes open and pay attention. So here we go. So from there, let's kind of take a look at some things in regards to the Fed meeting schedule. So let's get all this stuff out the way. We don't need this for now. All right. So we have this on the daily. And let's go ahead and look at our object tree. And what I'm going to pop on here are the exact dates from the FOMC meetings from the past and then where we're going in the future. And so what I would want you guys to kind of look at and pay attention to is just the events and how price moves leading up to that event, right? So each green vertical line represents the day that it was held. So we had late January, mid-March, early May, mid-June. We got July coming up here pretty soon. We got September, late September, early November, and then mid-December coming up as well. And then so the biggest thing I want to first take a look at is look at the distance between just this July meeting coming up here and the one in September. That means a lot of data can come through because that's more time. So a lot more data can come through that time. And so we will see. I've always had my eye on September. We will see if there is somewhat of a sentiment change in the way that the Fed is talking about things. Maybe there's things that develop through this large amount of time with the data that they receive. And so we'll see. Or they'll stick to it. They'll stick to their schedule to really try to kill this demand out here. But nonetheless, back to the main topic. What one thing that I've been able to see, so let's just pop off all of this so we can make it nice and easy. If you really pay attention, leading up to each date, we have had bearishness in price. So leading up to that first date to where they say, hey, we're going to start bumping rates, you notice price is on a nice downtrend. And then you have somewhat of a recovery. And then, price does whatever it's going to do. But then leading to the date, it heads into a downtrend, right? Same thing here, recovery, leading into the dates, heads into a downtrend. It continues to fall, recovery from there, but leading into the date, downtrend. And then where are we here? We're in that midpoint. So we've already started to turn over. So the question is, leading into the date, will we see a downtrend in price to wherever? And then so what we notice each time has been a lower low in price. Right? Except this one was pretty close, but nonetheless, lower low. And so one thing that we've noticed and that I've noticed that we've been in a regression band. So let me pop that up. We've been in a regression band that I've kind of extended here. So let's take a look at that and I'll explain, kind of what I'm thinking here. And so with that being said, with this regression band, what we've noticed that this midline has been very interesting where we'll flirt with it, but a lot of the time, except for this one period here, we just kind of come to this midpoint and either we get rejected off of it or we spend maybe about 4 to 5 days above it and then we'll come back down. So we've been rejected off of it twice already, here, and actually 3 times with what happened today, right? And then we played around with it for a few days on top of it here. So typically, what are we seeing? Just pay attention, right? We've been in this channel this entire time since the beginning of the year. And with that being said, what have we seen? Price gets attracted to this date, and it continues to make lower lows on these particular dates, right? Or somewhere around there, where people say, "Hey, there's a rebound," and then right when that date is coming up within about a week or week and a half, 2 weeks even, we start to see that price turn over and find its way inside this regression band. So I think this is something very interesting, something that I've been paying attention to, and we will see if this continues to happen. But with that being said, we got a couple weeks before the FOMC meeting. So Jay Powell, he's got a tough job. And I mean, he's been saying some stuff that has just been crazy, but at least they're admitting to some things now. But so as we kind of look at this, right, we've been knocked down. And if we just kind of extrapolate this a little further, and so we got how many more days until meeting? So we got a little bit of time here. So we got 17 days, if that's correct, and we'll see. So typically, what we've been seeing, we've been getting knocked down here, and so not saying that exact same thing will happen, right? If we break through this midline, then that will be something, and then we head to the top of this regression band. That will be something completely different, and then so that may start to show us, maybe something's going on different than what's been going on over the past 6 months. But until then, we just watch and then we react. We don't want to do anything too early. But nonetheless, if you have your investment strategy, then you know this is just information that helps you formulate what you're going to do. And so, I thought this was interesting. So we'll see how this happens, and then as the months go by, see if we pop out of this regression band at any point, whether to the downside or to the upside. And so it's very interesting. So kind of what I have plotted out, if we just want to look at where the support is coming up, this is like, hey, possibility. This is, I would say max pain, like 2008 bear market type capitulation. Where globally for more than a year, we're just having issues, right? And so I could see these levels being touched if that is the case. But just from an aspect of looking at just where volume is at, so same thing here. If we put on the volume profile, and so if you'll remember, this fib retracement level is here. So in between this 3,500 and so 3,500 and 3,600 for the SP 500. And then that next level, you see a good amount of volume here. So a lot of stuff was traded at this price point. So in between like 3,400 and 3,300. And so, we'll continue to see if this trend is going to sustain. But nonetheless, I think this is very important to understand these dates and saying, hey, if you have a trade strategy, so if you know how to look at these swings, right? Understanding that you would have had a lot of success by investing during the time we were having this meeting, and then when we get close to a median line like this, taking some profit maybe, and then you double dip. So right here, maybe you get to the top of regression band, take a little profit, maybe not financial advice, obviously. Then the next meeting here, this would have been one where you would have had a tighter window, but nonetheless had some positive price action the next day after. And so, with any trading strategy that's short term, obviously there's risk. But if you're a good trader, there's always been opportunities, even in a bear market. And so I'm not advocating for everyone to be a trader, but if you have a portion of your portfolio where you kind of understand these markets, there's something that could be done to your benefit if you know what you're doing. And so, same thing here. We'll see. We'll see if this date has significance like the last four meetings have had. And so, just something to think about. The next thing, really quickly. So, let me read some of these comments here. Let's do this. Da-da. What you guys got? Huh. So, I heard someone say, we'll be back. We'll be at the bottom when people stop saying we're at the bottom. Yeah, I mean, it's one of those things, right? Like when people keep trying to predict something, right? It's just really one of those things to where the way I see it, they gotta say it so many times and not be right to where they'll shut up. And so when you start to see a little bit more silence, that may mean something from a sentiment perspective. Cool. Joseph, what's up? Okay, so you got some work going on. Well, yeah, don't forget to check back in. Hey guys, really quick, like and subscribe to the channel if you haven't. Like this video, man. I really want to try to grow this channel so I can get this information out to just more people who are just unaware, and then so collectively we can join together. I think we can all greatly benefit. I need to re-listen to that strategy. I like it. Hey, not financial advice, but like I said, if you are paying attention closely and you know what you're looking at, I mean, there's always opportunity anywhere. You just got to know what you're doing. All right. Cool, cool, cool. All right. So let's keep rocking and rolling. So I want to take a look at some data here. And so if you guys don't know how to use the Fed website, I'm going to actually do a little bit of a whatever 10-15 minute tutorial of how to really use this data to your advantage. So where we're looking at the macro environment and we can have understanding there. So let's go back to the screen share. All right. So let's start with this one. So what do we have here? All right. So this is the consumer price index. So CPI, inflation basically. So as we know, inflation, I got a demonstration. Inflation, we go and work hard for this stuff here. You hear that? The sound of paper, the moolah. We go and work hard for this, and then inflation keep going up, and then out of nowhere, it just vanishes, right? And then we keep working hard. We make a little bit more, it seems like, and then what happens? Inflation just our money's gone. The purchasing power. So this 10, right? Actually, well, I'll do this. This $1 bill, right, was super powerful 15, 20 years ago. But to get the same amount of goods and services, now what do we need? We need one of these. So more money. So the value of this is worth something like this. And then pretty soon, this is going to be not going to do it. But you guys get the gist. This value is going to continue to go down. And so it's because the dollar is going down, this metric is going up. And then so how do you look at this chart and really utilize it to look at things from a rate of change? Because as we can see, inflation ain't gonna stop, guys. So this is the price index for all consumer, just all consumer goods here. So how do we look at this at a rate of change? What you'll do is you'll go to edit graph, you'll go to the units because this is recorded monthly, and this is data straight from the mouth of the people that are telling us these things, right? This is their data. And so we'll go all the way down to percent change from a year ago. And this is where we get our percentages from. So this is where we get that 8.5%. And so, the interesting thing here is, that this outlier in inflation is obviously the leading issue apparently across the world. So same issue here in the mid 70s and in the 80s. And so through time, we're gonna see if we can get a curve and curl back down to some type of regularity. And they're trying to say, hey, raising interest rates is what's gonna do it, but that ain't it. That ain't the only thing. Them trying to just kill everybody's demand in a society where we are increasingly getting more complacent as people. We are complete, like, just honestly, more people are more lazy than they were 10 years ago, right? So why these big box companies, Amazon, Uber, they continue to make money because we're just lazy. They'll continue to soak up all the money. Soak it up, soak it up, soak it up. Charge more, charge more, charge more, right? And we're going to have to deal with it because that demand is still going to be high because we are just inherently lazy. And so, with that being said, uh, I have no problem saying that. I even catch myself being say, "Hey, can I go and do that myself, or am I gonna always just pay someone else to do it?" And I always tell myself, no, I can go handle that. I don't need to pay somebody. It's just like that's how you really change demand is learn how to take more responsibility for yourself, and that's kind of what crypto is, right? Taking more responsibility for your finance. But with that being said, that's a whole another subject. But as we kind of look at this chart here, this is where we're at, guys. This is a clear deviation from this trend of going downwards in inflation through time, but on a rate of change year over year, 8% more than where we were at this time last year. So just something interesting. And the biggest thing that I don't think people realize is what we're already starting to see. We're already starting to see people lose their jobs. Now, but why is that? Why do people lose jobs when inflation starts to get crazy? Well, the thing is, all of this stuff gets, so you got to understand it's top down. So consumers get the last of it. But even these large employers, right, they get hit with it first. So imagine anything involving, hey, you have to ship your products or get your products shipped to you. It costs more, right? You got to store your products in a warehouse and energy. It costs more, right? So with that being said, you cannot employ the same amount of people, which your any business owner would know this, right? And they understand this aspect. So as us, as most people are consumers, I'm here to educate you guys on how things work in this way. And so why do people get their jobs, cut, or businesses kind of skim down? And we're looking at it all throughout crypto. Coinbase has said this, right? We're seeing a lot of things just happen to where it's like, what the heck is going on? Companies are looking like they're insolvent because of bad practices, right? But then on top of that, things change. And then so the people who are not pivoting and having themselves ready for any type of change get hurt the most. And so with that being said, the reason why inflation infects not only just consumers, but then employers as well, is because of all of this stuff gets passed through a funnel of money from the government to the banks, right? And then so these companies that take loans from the banks, like some of them can't pay their loans back, even within crypto. Everybody's lending each other money, can't pay it back. Now what do? They got to cut down, and it affects who? Consumers and people that work there. That's exactly what we're seeing everywhere, right? Tesla, Elon said, hey, we're going to start cutting. Netflix, they already cut some of their employees, right? And then so another one I want to take a look at is employment cost index. So to basically pay people, and we'll look at the regular chart here. In order to pay people their wages and salaries in the private industry. So we've got to understand private versus public. Government stuff, public. All of these private corporations, private, right? So understand it's a big pie of money, just like a big circle of money, and a good portion of that is private. And so the places that where most people work. And so what do we see? Yeah, people are earning more through time. And why is this as well? Because the dollar's going down, but the dollar's going down faster than this is going up. Because if that wasn't the case, then everybody would be able to live very comfortably. So we know this system is built to be this way. Something to think about. And so as we can see through time, employers, in order to, have employment, it continues to grow through time. Now, when we do this, same thing, go to units. We're going to go ahead and click on percent change from a year ago. And what do we see, guys? So we see a tremendous influx of it being more expensive for employers to have employees. And so what happens, they realize, oh, it's going to cost us to keep these people in this way because why? They're getting hit. They're having to pay more just like everybody else. What are they going to do? Jobs are going to start getting cut. So the thing is, when we see the unemployment rate start to get jacked up, that's how you kind of start seeing, hey, we're going to see some tough times. So just do your Googles, right? So do your Googles and go, all you got to do, job cuts, and see what you see. What do we see? Tesla, this is 2 days ago. Tesla is sacking staff who recently started and withdrawing job offers. Netflix cut 300 more jobs after subscriptions fall. Ford, these are all major companies here. Ford warns of significant job cuts as it picks Valencia for electric car plant. That's a whole nother, because I'm a car guy, I like cars, so I pay attention to a lot of this stuff. Ford, I'm surprised they're even still around. They have horrible business practices. Yeah, they make some decent trucks, but I'll be surprised if they're here in 2040. I really would be, right? But do your Googles and see what's coming, guys. And so, does that sound like liquidity is going to start rushing to markets? Put the pieces together. So, this is not to be bearish. This is not to say, hey, we're all going down. But with that being said, we just got to take it for what it is and adjust accordingly. And then, so investors that understand value, right, can take advantage of lower prices because, as we've seen systematically, things are meant to go back up, right? And as we've seen, this SPX. Okay, so let's just do this. We'll click everything off except for Bitcoin, which will represent crypto, and stock market. And what do we see? What do we know? Even oil. I mean, oil is pretty decent, but that's more so short term. But for long term investors, what can we visually see? That this thing here, this crypto space, exponential. And if we were to put this on a log scale, you'd see it just up and to the right. So it's interesting, using our eyes to pay attention, right? Seeing what's going on and not being distracted by the social things that they try to distract us with. Where are they spending money? We got to understand the United States is a for-profit, capitalism, right? Like United States doing things for money. So I don't know if you've heard about all these missiles going to Ukraine, but do you think they're giving it to Ukraine for free? Well, some of it, yeah, but this is where the United States makes a lot of money. There's a lot of guns here. We produce a lot of weapons and we sell a lot of weapons here. And so there's some things happening in the background. If we can all try to pay attention, get an idea of what's going on. But yeah, one last thing. So look into Bitcoin. It's a pretty good site here. I really enjoy looking at when they have new models to look at and pay attention to. And this one has a catchy name. So it's Bitcoin price prediction that updates daily. So not weekly, but it updates daily. So they had to put this last piece in there. Anyways, and so this basically puts together 5 different metrics. So we're looking at obviously the Bitcoin price, the CVDD, top cap, which was made by Willy Woo, I believe. I think both of these were made by Willy Woo, the delta top and the balance price and the terminal price. And then so to spare you guys can come and read what each of these are for, right? Delta top kind of coincides with the NVRV score. Okay, so yeah, so Willy Woo, he did this top cap. And then so this is kind of loosely based on the Pure multiple as well, but the balance price. Like I said, I'll spare you guys the jargon, but nonetheless, you kind of see confluence here. That's kind of a big thing, and putting all 5 of them to look at tops and bottoms, right? So I think this the Pi Cycle top does a great job of looking at tops. This model looks to be pretty decent thus far throughout Bitcoin's history, but nonetheless, we are in a time period where maybe Bitcoin hasn't seen. So we'll see if this model still works. But mainly kind of looking where we at closest to, we're closest to low. So that's why everybody's paying attention to a low. When things get back bullish, guess what? People are going to be paying attention to the top of these metrics, right? And trying to call a top. Instead of trying to call anything, right? Just use the data and use your eyes and use your brain. And then be patient and have a strategy. That's it. But if we kind of zoom in here, or here, let's go back here. And so really, when you look at the balance price kind of intertwine, right? So with the CVDD, when you see both of them intertwine together, typically that's when you kind of see a local low with this metric. And so same thing here. We want to look back in 2015, once again, here in 2018 through 19. And then here you see these lines intersecting, and it looks like we just started that process. And so, well, really quickly, Let's look and see where that price is for the CVDD is at 16.5. And price is currently at around like 20K. So what is that telling us? And this is actually curling down slightly, right? And it's very similar structure because same thing here. If you look at this balanced price, and you see we have that bull run, and then it curves off sideways, right? And then it kind of loops up very slightly, and then it heads down very slightly, right? And then you see the intersection in price. Same thing here, loops up, and then it's on a slight decline, right? Then price intersects. Same thing here, loops up, and now it's on that slight decline, and then we'll see when price intersects both of these. And so, hey, I mean, past performance doesn't always equal future performance, but we'll use it for, what we got. And this is, data. All of these metrics are equations, all of them. The delta top, right? Realized cap minus the average cap. All this stuff is data. This is not anyone's opinion. So we'll use data to our advantage to people who are not looking at this stuff and they're guessing and they're just saying stuff out of their butt that they don't know what they're talking about. And so, yeah, I thought this was pretty interesting. But outside of that, I think that's a wrap for today. I think we are gonna come in for a smooth landing on the stream, something that the Fed probably ain't gonna do. Anyways, Swerve Gang. I don't know, man. I don't know. We may have to think of something. We'll see. We'll see. But I appreciate you guys sticking with me. We didn't go too long. We're right about an hour. But just to do a small recap, what's going on? Energy, right? Oil up. Commodities up. Distraction around the world, social issues up. Right? Asset prices down. FOMC meeting coming up here in about 2.5 weeks. And so what we've seen here, price trends a little bit, downwards in anticipation. So the market tries to price things in for that meeting. And so, when they're expecting a 75 basis points or higher, that's kind of what we're looking at coming up here pretty soon. I may venture to say that, hey, price may be looking to trend down here in anticipation of that. Not a guarantee, right? And so that being said, hope everybody's doing well. I'll be trying to do more streams here. So like I said, if you guys like what I'm doing here, trying to put a little bit of extra time in, like and subscribe, tell a friend or two, and I'll be seeing y'all in the next video. All right.